All right, here we go. We are live. How you doing, friends? It is Tuesday, a little bit after 2 o'clock on the East Coast. And today is the final day of the May contract for oil. I know you're saying, well, Ernie, you're talking about gold. What's this oil stuff? Because oil is in the news. And it is the black gold, the Texas tea. And oil is all the news. Everyone is freaking out. So new creation baskets in the ETF USO have been halted, which means that they can't issue any new shares. There's been something on the order of $1 billion in new orders coming into USO, and they may be able to fulfill 24% of that before they run out of shares. So effectively, USO will be shut down. And the reason for all of this is due to a storage issue or a lack of storage issue. They're producing oil. We're not using oil. And there's no place to put it when you want to take delivery. So if you have an oil contract and you let it run out, expire, you bought that contract, you're obliged to take delivery. Now, normally you would take delivery and it would get stored at some storage facility. However, there's no place that's willing to take it. So therefore, we have a no-bid situation. And when you have a no-bid situation, price can go just about anywhere. It could have just as easily gone down to negative $1,000 yesterday. I think it reached down to negative $40 and change. That is out of sight. Unfriggin' believable that oil could get down there. But what's happened with gold? Gold seems to be kind of just hanging out saying, hey, the show is fine from here. Not much happening. Can't break through that 1750 critical level. That 1750 critical level I look at between, plus or minus 10, 20 points. That range right there is huge resistance. Should we break through that level is kind of a neckline for this massive rounded bottom. Some people might look at it as a cup, but that's if you're looking at it from a weekly point of view. So you take a weekly chart and you compress, 10 years, 11 years, 12 years of the chart down to like this. You can see this very, very nice, big, rounded bottom. Now, from a technical point of view, you look at it, you say, hey, all charts, all patterns, they're fractal, right? It doesn't matter how big they get. But with gold, that big rounded bottom, I don't know that is really a thing. It's not really like a rounded bottom. A rounded bottom in more technical terms is usually something that occurs at least within a year, not within a decade. But let's just say that all things are fractal. And that rounded bottom is, somewhat significant. And then maybe what we're forming now, if we do not break through that neckline, that 1750 mark, is a pullback, and we get maybe another year to produce a handle there. If that is the case, if we do pull back, it looks like we're going to pull back to some meaningful area, maybe anywhere between 1,300 and 1,450 maybe. It's just a guess. I don't know. From there, I think gold would be an excellent buy. Anywhere around there. And it's really in the context of, where the market is going. Where is the market going over the coming years? Sure, we're all like pinned down in this, coronavirus pandemic. And nobody is really looking at the market going to hit, Dow 35,000. That's not what they're looking at. They're trying to figure out where they're going to get the next paycheck. But trust me, this downturn is temporary. It was artificial to begin with. It wasn't something, you can make the argument that we were in a bubble anyways, that the market was essentially propped up by QE And, there's a good case to be made for that. And the coronavirus was nothing but the prick that pricked that bubble and popped it. Okay, so let's say it's popped. All the gas has been released. And we get to start over again. That's what it's all about. You pop bubbles, you reset. And maybe that's what's happening. And gold, as a general rule, is going to keep its value. It's going to keep its value over the long term. Now, right now, gold is kind of I don't know if it's hypervaluated, but it may be a little bit overvaluated in relation to where the market is, particularly now that the market has pulled back. So maybe gold needs to pull back a little bit. Gold will pull back a little bit, and then we'll have that opportunity as the market then reaches for new highs, and gold will retain its value. Now, there are certain cases where you would expect gold to rise. Is it in a deflationary time? No, it's actually quite the opposite, right? Do you really expect gold to rise during deflationary times when there is nobody out there? There's no demand. There's no demand for anything. Prices are going to fall. So what makes you think that gold is going to rise in that case? However, gold has risen. Why? Well, gold really rises on two cases, usually with market shocks and high inflation. Now, what we got was market shocks and deflation. Well, we haven't really officially got into deflation yet, but, we at least got the market shock. So gold, like a champ, has provided that kind of insurance for us and held its ground. It's moved up. It's given us the kind of protection that we need. And then, there are other assets that are out there that would give us similar protection in the case of market shocks, things like being long volatility. And, of course, if you were holding on to the VIX or you were short puts, I'm sorry, not short puts, you were long puts in the market, or you had, massive theta decay type of options plays, you were basically collecting premium. All of those are long volatility plays. Those have all paid off. Volatility is still pretty high. The VIX itself, let's see, where is the VIX right now? Let's find out. VIX. VIX is an index. Let's see if we can move over there. Hold on. VIX is the index that we're looking at. You like the background, by the way? It's kind of cool. VIX is the index. VIX is sitting at 40. What's that? 45? Wow. Now, we were on a downturn there for a little bit, and we started to, after this pandemic, we've just sort of been easing into this and shedding off some of that volatility. And then this last sort of turn up, that's all because of oil. And, of course, that brought the market down a little bit, too. So that's why we have that. But it looks like we're about to turn around. We're about to turn around, especially this being the last day of the May contract. We're going to be moving into that awesome contango situation with oil. Markets should start feeling a little bit more confident. There are at least several states that are now talking about getting people back to work. We're heading in that direction. Let's see, where is the ES today? Undoubtedly, we're down a little bit, right? Yeah, we're down. But we're up. We're off the bottom. We're still not in bear territory. So these last two bars, that's the panic that set in because of oil. Now, I expect us to perhaps do a little bit of dance here and create a little bit of consolidation, and we'll have a nice bull flag, and we'll probably move further up into this big value node here, perhaps hit this POC here. That would be my target. Let's see, where are we? That would be about 2,900. I can see the market moving up there in the next week or so. So that's really where we stand right now. Gold. This video is about buying gold, right? Let's see, where are we? We were on the VIX. Whoa, look at that, USO. USO is at $2.40. Holy crap. I don't know if you can buy any right now, if there are any shares there to buy. Creation baskets, those are the baskets that an authorized trader would be out there, or authorized party, I guess is what you call it, an AP. They go out there and they have an order from the managers of the fund, and then they buy all the things that they need to buy, and then they come bring it over back into the fund, and then they turn those back into shares, and then they offer the shares up. Well, apparently that buying right now has been halted by the SEC. So they only have the shares, the outstanding shares they have to deal with. And so there are people that have been throwing money in. There's only so many shares after those are all up. So trading will go on with what we have. And so price continues to fall. Let's see where we are with the current contract for oil. The current contract with oil is, so we have, this is the May contract. All right, here's the May contract. It has rebounded dramatically. Look, it went all the way down yesterday to 40. And then today, right now, it's sitting at about minus 10. That was minus 40, by the way, not 40, minus 40. Now it's at minus 10. We still have a little ways to climb. Or are we above 10? Are we above zero? Are we above zero? Yes, we're above zero. All right, so we're at about $10 a barrel right now. That's for the May contract. So we've gotten out of negative territory. Let's find out where the June contract is, because by tomorrow that will be the front contract. June will be front. Today it's May. The June contract is right at about 10. So our contango has basically, our contango spread between May and June has closed right up. That's a beautiful thing. Wonderful how markets work. So now if you're in the May contract, you at least have some ability to roll to the next. And contango has been satisfied. So we're good. All's good. All right, back to gold. Where's gold? This is volatility. Let's go to gold. So here we are with gold. Let's see. Let's check out my my analysis of gold. This is something I published not too long ago. And so this is a weekly chart of gold. You can see back in 2011 when we had that bubble, ran up, and then it burst. We had the secondary, the first blow off top, secondary blow off top, and then a series of dead cat bounces until we capitulated. And then finally we're into this new contagion, and we're up again, creating this massive, massive rounded bottom. Again, I don't consider it a real, true rounded bottom because there's no sort of precedent for that. If we go out and look at how many decade-long rounded bottoms are there that we look at and say, hey, there's statistical nature in there. There's something statistically significant that we can pull off and say, hey, that's happened, let's see, 2 times in every single asset in the world. No, there's just not enough cases for us to pull off of that. But let's just say that, okay, it's a unique case. We have this big neckline up here. We're trying to break through. I see 2 scenarios. One is that we break through and move up. All right. Now, what would that imply? That would imply that inflation is coming. We've already moved up because of the market shock. But I don't think we've moved up enough to justify inflation. I don't think the market is really looking for inflation right now. The other scenario is that we will find that resistance and we will pull back. And there are 2 logical places where we can pull back to about 1450. Then the next logical place would be at the top of this value node, which is at about 1360. So it's very possible we might pull back to those areas and then consolidate, maybe move up again. I don't know. That all depends on what the broader markets do after that. So that's my outlook for gold. That's where I think gold is going. Let's get back to the big head. Where's the big head? There he is. The big head with the cool background. All right, let's see what people are saying. Is USO going to zero? Probably not. Ernie, I think stocks will crush this week. What fundamentals are making you believe it will rise? People going back, not fundamentals. And really, I'm not using fundamentals at all. It is really all about, sentiment. All right? And the headwinds for sentiment right now are two things. One is the building stress between the world and China. All right, China might just blow a gasket. The CCP, the Chinese Communist Party, they are under siege. Everybody is on the case. Everybody wants to pull out of relationships with China and break those global supply chain ties that they have, because no one wants to be beholden to China again. Right? And rightly so. And the U.S. is the same deal. We don't want that. We want to be able to control our own destiny should another pandemic come to pass. And China is, they are scared shitless. Not only are they going to have a negative GDP, but they're going to have a series of negative GDPs. They've got some serious soul searching to do. And let's hope that this is a big ding to the CCP, the Chinese Communist Party, and we can see, I think it's wishful thinking to think that they're going to fall. They just have such a stranglehold on people. They're offering, and for a long time they had the stranglehold on the world. They were giving us this gold encrusted service, this first class infrastructure at third world prices. How, who in the right mind could pass that up if you're running a business? But now along comes with it a contagion, a risk of a pandemic, a risk that you have no idea what the CCP is going to do to fuck you over. And now everybody has come to grips with that, yeah, China, they'll fuck you over. They'll do it in a heartbeat. So we have China, and what are some of the other headwinds that we have right now? The biggest headwind we have is that we are not getting back to work, and we need to get back to work in order to start creating that velocity of money, economic activity. Now we have at least some. It's not like we're totally dead in the water. If you've noticed, if you go to the supermarket chains, now people that are not in the United States might not see this in their own country, but in the United States, you can go to virtually any supermarket and their shelves are stocked. No problem. No problem at all. And we have one of the most complex and most intricate just-in-time delivery systems for our domestic supply chains that you could possibly imagine. And the feat that they had to go through, the adaptation that the markets had to go through in order to redirect all of those other businesses that were consumers of agricultural products and food products and all the other products that go along with that industry, even consumer staples and all of that stuff that got diverted from schools and hotels and food banks and all these other things where food was going to, all got redirected right back to the supermarkets and other venues, right? So we didn't skip a beat. So that excess supply was taken up. Now, in some cases, it didn't come directly from the manufacturers. It was still shipped to the mom and pop grocers and others that had to shut down, and then they became an adjunct to the bigger supply chain supplying the supermarkets. I mean, just an incredible feat of dexterity and mobility and just-in-time delivery. That happened. So to think that we can't then refashion our supply chains that were on a global level to supply us with these products and raw materials. Oh, something in my throat. We can. The problem is the supply of goods. We need to replace that supply of goods. All that crap that came from China, we need to replace it like iPhones and shit. We need to replace it with things that are made here. So that means that we need to build up our manufacturing capability here and domesticate a lot of those global supply chains. Globalization, everybody is roundly saying that it is dead. China's doing everything that they can to manipulate our media, to manipulate our cultural aspects, our educational system, everything that they have their tentacles in here, and they're trying to change that perception. They're doing whatever they can to try to bring down the Trumpster, too. The Democrat Party is basically the propaganda arm of the CCP right now. It's unbelievable. Do I recommend buying physical gold instead? And if so, where from? I don't know where you're going to get physical gold right now. I really don't. There may be some supply, some gold dealers, some coin dealers that might have some. Get it from your friend. I don't know. Maybe somebody wants to divest in it. But really, the only play right now is the gold miners, maybe the gold ETF. I mean, that's still available. You can still buy gold ETF through the proxy. You can buy juniors. You can look at some of these other plays that are coming up, the junior miners and exploratory operations. Those are all really good asymmetric bets. Speaking of asymmetric, and you may have noticed on my thumbnail in the lower left of the thumbnail, it says Asymmetric Advisor. The Asymmetric Advisor is my new newsletter that focuses on the precious metals, gold, and resource industry, commodities, etc., but mostly focusing on miners, the juniors, royals, and streaming companies where we make asymmetric investments and speculation on that market. Join the newsletter, right? I don't know if I have a link down below, but go to asymmetricadvisor.com and join the newsletter there. Get the advisor. We're having a weekly webinar this week. We've already had some fantastic calls in there. Our most recent call has made 100% gain in the past few weeks. So that's what we're doing. We're looking at asymmetric, speculative, and investment type plays. And we're doing that through this newsletter. And that's how I would buy gold. I would buy gold looking at the broader market. The other advantage of the Asymmetric Advisor, I'm sorry if this is turning into a commercial, but people are asking, well, how would you buy gold? This is what I would do. I would join our group and see the possibilities, see how you can actually make some serious money, even if gold doesn't go up in price. That's what I would do. And that's what we're doing. What do I think about the theories that the Fed has to keep the stock market propped up so that China doesn't buy our companies for cheap? No, they're keeping the markets propped up, not for China, not to ward off China, but to keep people whole. That's pretty much it. You got to keep the market up so that the wealth doesn't disappear in this country. Do you remember? Let's see, what else? June content, blah, 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 blah. Raphael says, I will, thanks. Oh, message retracted, so I don't know what he will. Do you recommend buying, physical gold? Yes, talking about Asymmetric Advisor. That's where I got, sorry, just reading the comments as they come. Yeah, Asymmetric Advisor. I highly recommend it. You'll see a series of videos that I'll put out over the coming weeks. We'll have a webinar every Saturday for the next several weeks, and that will be sort of the introductory. I just introduced this service just about 4 weeks ago. We have already got about 50 subscribers, adding about 10 a week. That's my goal. Add about 10 people a week. And then we'll go from there. Great service, excellent value. It's not expensive, you'll get fantastic value. You're going to get to learn how to be an asymmetric investor. What does that mean? That means you'll learn how to find trades and opportunities, mergers, acquisitions, other types of research. You'll be able to lean on the research, and you'll learn how to do the research into these resource companies to figure out, which ones are the most likely to be acquired. And that's where we make our big bets, or which ones are the most likely to literally strike gold and make a ton of money. And that's where you put small amounts of cash into these companies, and if they're acquired at huge premiums. If they have good prospects and you invest in them, and then they go from drilling a mine to producing 500,000 ounces of gold a year, again, big wins. Those are the type of things that we're looking at. All right. That is how I would play gold. I would play gold by getting involved in the resource market, getting involved in those boom and bust cycles. And now is the perfect time to do it. We also invest in oil, although I'm stepping back from oil a little bit, waiting to see whether or not people come back to work. Once we get people back to work, they start turning the gears of this economy. Oil will start flowing again, turning it into energy and into products. And then those storage facilities will start, seeping away as the oil gets used. OPEC is going to have to stick to their plan of cutting production, rather than just getting into this hissy fight between Saudis and Russia. The president today has announced that he will absolutely prop up and keep stable our oil and energy sector here in the United States. He says, don't worry about that. He's 1,000%. It's a strategic resource. We're not going to let it fall. It's just not going to happen. Not going to happen, especially under this captain. Not going to happen. Not going to happen, Captain, at all. Oil, energy is secure. The market, I believe, is going to continue to go up as people realize that the coronavirus isn't as bad as we thought it was. It's still bad. Don't get me wrong, but it's bad for a certain segment of people. And so we need to treat it that way. And the death, I think you're going to see that the mortality rate is much lower because many, many more people have been infected than we previously thought. As much as 80 times more. I think the number that we're converging into in these separate studies is somewhere between 40 and 50 times more than the reported cases. So what that means is that the death rate is approximately 1/5 to 1/8 what is being reported now. And so that's good. That means that it's not much worse than the common flu. The problem is we have no immunity to it. It spreads like wildfire, spreads much faster than the flu, so we are going to have to adapt to that. New processes, new ways, new cultural shift. And that's tough. Any kind of cultural shift is a tough thing to organize, to orchestrate. Yet that's what we're going to have to do. So that's where we're at. That is where we're at right now. It's an exciting time because things are going to get reborn. We're going to have literally new industries that are going to be created to take advantage of this new direction that we're going in, this less globalized direction, this working our way out of this sort of deflation pit. Start domesticating and making our supply chains more domesticated, which means less efficiency. We don't get the same efficiency of buying slave labor from China anymore. We're going to have to pay more money for American jobs. And people will like that, but that means that the end products will cost more. Would you pay a little bit more if you knew that the money was staying in America, paying for American jobs and making our country more viable, stable, stronger? I would. I'd pay a lot more. Consider also that our wages will go up to compensate that. So it won't be like it will be hurting you much. It's kind of a perception problem. things will get better. People will start going back to work, and they're going to say that is good. People will start innovating, creating these new supply chains, new manufacturing, new products, new services that don't exist right now, remote learning and education. Much better bandwidth on our internet services for sure. New manufacturing plants all over the place, new services. It's going to be intense. Telecommuting is going to be big. If you can think of some things to conjure up, the type of things that are going to change in this economy, go down below and put them in the comments down below. I really want to thank everybody for joining me today. It's too bad that too many people didn't show up, but I think that this video, if you would do me the favor and hit that like button and also share it out to your social media, that would be really great. I mean, that's how we get more people in on the action here. I think this is important information that I'm putting out there. It's quality information. Thank you very much for showing up. Really appreciate it. Thank you for those people that are in the peanut gallery and your comments. And we'll see you next video. Take care, friends. Go gold! See ya.